How's everybody doing today? What I've been doing over the past few years is try to develop the tools necessary to perform these different types of analyses that I've been wanting to do. So I've been, trying to do market geometry and all of the Elliott wave and trend channels and median lines and all that type of analysis on multiple time frames, just using Ninja's drawing tools. And while, we want to stay on the NinjaTrader platform because it is, based in C# and we can do a lot of customization with it. So rather than going and trying to find, a different platform, I've been attempting to, just design and build out the tools that I need for trading, for me personally. And then once I started down that road, of course, I ran into some pretty hefty bills. Now have 2 full-time programmers working on developing the rest of the features out that we need. And we're pretty much done. I think we'll be on Ninja 8. I don't want to, sometimes I say things and then we run into some kind of a snag or have some bugs that we can't quite figure out. But I'm guessing probably the end of the fall, we should be working on Ninja 8. And according to Jeremy, he's thinking that's probably about the time that he'll have Blackbird on Ninja 8 as well. And of course, once we can be on Ninja 8, we'll be able to watch many, many more instruments and have a lot more workspaces and be able to have multiple higher time frame workspaces and even look at stocks and options and things of that nature. So I know as much as you guys that have already purchased all this stuff are eager to get onto Ninja 8, I definitely am as well. But anyhow, the main focus of the analysis is market geometry. That's really the backbone to what we're doing here. Right now, give me one second here. I'm connected to Market Replay. I'm going to attempt to do this in front of you with Blackbird here. I also have a couple of trades recorded, pre-recorded. But I want to give you some kind of idea as to what all we've developed out. For one thing, we wanted to have the tools that would enable the analysis that we're doing to make it essentially as efficient as possible. We wanted to, save clicks, save time, eliminate as many steps as we possibly could. Basically, just like with an assembly line, counting steps, right? Counting actions that you have to do. So we wanted to make the market geometry analysis as efficient as possible. I've looked into automating it, and that'll probably be eventually doable, but there really are so many different moving pieces, just like with Elliott wave analysis. There are some software companies out there that attempt to automate Elliott wave analysis, but of course they all fall short because it is such a, I was going to say complex. The problem with Elliott wave is that there are so many different guidelines, basically. So you have different wave relationships, you can have different timing relationships, so both time and price, and then all these different guidelines. So one pattern occurring over another might be more likely, have a higher probability. So you would have to have all these different truth tables and probability tables and all of that stuff to really program it properly. And the main problem with market geometry is really kind of the same thing, identifying the proper swing highs and lows that you want to be drawing from and doing that across multiple time frames, of course, in an automated fashion is that's going to be a programming nightmare, but that's something I'll be looking into eventually after we get to Ninja 8. But anyway, we wanted to, make this manual, this is discretionary type of analysis, performing market geometry analysis and drawing trend channels and median lines. We wanted to make it as easy as possible. So to draw basically to click on the chart the least number of times while drawing everything in properly. This is a 30-second chart. Let me look at a larger chart here. So for instance, here on the half-hour chart, I'm drawing in both and I can turn off the volume and the divergence here at the top of the chart. You can control the divergence algorithm, all the drawing objects and everything right here, but I can turn all of that off so that I can start with a clean chart to start performing this analysis. So when I'm drawing in, for instance, these are the 5 or 6 market geometry buttons here, and you can customize these and make them look or do exactly what you want them to do. But when I start drawing it, you see it's drawing both the trend channels and the median lines at the same time. For instance, here in NinjaTrader, you have the Andrews pitchfork. It's Andrews median lines. Median lines are pitchforks, and then you have the trend channel. Right, so we're drawing both of those at the same time and finding that swing low automatically, which is the widest perpendicular swing relative to that baseline, to that trend line. So we're doing that in an attempt to eliminate as many clicks as possible. And then through the reader system that we've developed, we're able to access the values of these lines from any other chart. So my idea has been to get to the point to where I could actually use Bloodhound and Blackbird to at least automate the trade management for these trades that I'm taking, from these areas. All right, so I needed to be able to access, number one, the areas in the market geometry, and I needed to be able to access those from any chart, not just the chart that Bloodhound or Blackbird is on. The problem with multiple time frame analysis in NinjaTrader, you essentially have to build those higher time frames on the chart that your strategy is on. So if any of you guys know anything about developing out automated strategies or anything in NinjaTrader, you actually have to build those higher time frames in the background. So if I want Blackbird on this 30-second chart, and then I want to bring in, let's say, a 5-minute or a 30-minute or a tick chart, I have to kind of layer those. And each chart has to have the same number of bars. So there's all these different limitations. You can't have different session templates when you're adding in these higher time frames. Just suffice it to say that it's incredibly problematic and resource intensive to do anything multiple time frame related. But of course, to be accurate and to have a system that actually is able to adapt to what the market is doing, for instance, what I was talking about in the last webinar, identifying the chart that the trade is occurring on, the operative time frame, what is the duration of that correction. To be able to do things like that and be adaptive to the market, you have to be using multiple time frames. I know that it is maybe a little bit overwhelming for some of you guys when you first get into multiple time frame analysis and trying to manage multiple charts, especially if you only have one monitor. I know that's next to impossible with just 1 or 2 monitors, but if you have at least 3, multiple time frame analysis is really where it's at, because there are all of these patterns that recur. You hear people say over and over and over, the markets are random market theory. I had that beaten into me in college in finance and economics. Everything is random price action. Well, that's a myth. If it were completely random, then how would we be able to day trade and make any money? Why would you, if you truly believe that it was random, then why would you even be sitting here listening to me? If you thought it was random, how do you think you're going to be able to make money? Just purely through money management? It doesn't add up. There are recurring patterns that we see over and over and over. And maybe if you look at price action independently, just by itself, without volume, there is some random nature to it, but it's not purely random. It's more chaotic, right? I'm sure some of you guys have heard of, what was his name? Francois Mandelbrot, the guy that studied fractals and applied it to the markets and basically everything in nature. We don't need him to tell us that the markets are not random, that they're chaotic. It's pretty obvious when you see patterns recurring over and over and over, and you get to the point to where you're trading these patterns and you're making money consistently, as I have, as so many people in the trading room have. It's self-evident that the markets are not completely random. If you're trying to, forecast all the time and project what the market is going to be doing all the time, yeah, you're going to fail, and you're maybe going to be right, I don't know, 35, 45% of the time, if you're lucky. But the fact of the matter is, we don't have to be exactly accurate with the wave analysis to still make money. So we perform the Elliott wave analysis just to kind of get an idea as to the market structure, and then we do the market geometry to find the exact areas that we want to trade, and that market geometry analysis always supersedes the Elliott wave analysis to a degree. We're not ever going to be trying to trade multi-week highs or lows. We're not trying to pick tops and bottoms. We're trying to find these corrections. And this is a perfect example of a little correction on even a 30-second chart, just right here. So you can see a pattern just like this unfold on any and every single time frame. And when you factor in the volume and how the price action slows down or completely capitulates into a high or low, let's say capitulates into a low and then massive buying climax into a high, when you factor in all of those different types of swing highs and lows, you can categorize just about every correction into one of, let's say, 13, 15 patterns. And you see these recur over and over. The thing that I think messes people up is establishing what that operative time frame is. I think that's where a lot of people kind of fall short when it comes to pattern recognition and just trading in general, trying to use multiple time frames. You really have to have some sort of idea as to what time frame the setup is occurring on, and what's the minimum retracement or minimum time duration of the correction that you're going to trade. For instance, just one example, with the recent Blackbird and Bloodhound templates that I've created, the smallest correction in duration would be 30 minutes. And that's typically, even too small for me. But because we're doing this in the trading room, I'm doing this in front of all the guys in the room, I wanted to allow some of these smaller corrections so that we're getting as many signals as we can over the next couple of weeks, so that everybody gets familiar with using Blackbird, all, of course, in a sim account over these next couple of weeks. Get everybody up to speed with using it, how you can manipulate it to match up with your own account and all of that. And of course, everybody needs to be using this in sim for, I would say, a minimum of a month, at least a month, just to make sure that you fully understand how it operates. What are some of the different possible errors or problematic situations that may arise that you would have to deal with. So when we're talking about using, in this case, really semi-automation, but still the trade management is essentially fully automated. But the entry, of course, you decide when you turn it on and off and what the exact rules are going to be. But anytime you're dealing with automation and a live account, you want to be very, very sure that you have a solid understanding of how that operates and what some of the different issues that might arise would be. So back to the toolbar, the main thing is market geometry. Of course, we apply Elliott wave to get an idea as to what section of the market are we in. Nasdaq has been screaming to the upside for the past couple of years. And if I were to show you the daily or weekly chart, it's basically straight up. And we've just had a really picture perfect correction here. I mean, you couldn't really ask for anything more beautiful than this. You have a nice 5-wave move down, double 3 back up, and then an ending diagonal here for a C wave. And it's just really perfect. So the move out of this has been, obviously going to break new highs, and we've just recently done that. And that first high or low was created from this lower median line here. So the difference between back adjusted and non-back adjusted data is showing up right here. This is back adjusted data. I'm not going to get into all that. I don't want to drown you guys with details, but on the continuous contracts, this low occurs right off of that line there. Sorry, from the low here. Anyway, I'm not going to get into all that. The major swing highs and lows will occur at areas defined by the market geometry. You know, people have asked me, well, why is it that you think this stuff works? Well, I don't think that it works. Anybody can prove it out, but I've proven this stuff out beyond the shadow of a doubt. The markets do trace out geometrical patterns. I don't know why, it's the way it is. It's pretty interesting, really, but I think any of you guys could easily prove this kind of thing out to yourself. We just wanted to have the most robust system for applying the analysis so that we could save as much time as possible and then be able to manipulate the areas that we're defining with the market geometry. You know, deleting individual warning lines by themselves, deleting median lines or even channels if we wanted to, independently without having to open up the dialog window of the drawing objects. So we wanted to make it as fast and simple as possible to apply, and then also be able to have a really advanced alert system if we wanted to. For instance, let's say that I had to walk away, or I have a day job, or blah, blah, blah. I know that the market has just made a perfect 5-wave move to the upside here. 3 is a perfect 5 itself. It's quite brilliant, really. And we've just had that initial big A wave down. So let's say we're just turning down, I've got to step away. Well, I want to be notified the minute we get to an area that I have predefined here by the market geometry. This is the high before the low, and this is the high before the next low. So I'm simply connecting those two together. This is the last major area where supply came in before that low was created. And this was the last major area where supply came in before the next low is likely to be created. So we've already hit the median line here, but we actually touched to the tech channel line right there, you see. And this low is found automatically. Of course, if you dragged it back, you would have hit it sooner here and then gone through it a little bit. So this low that came down hit that one perfectly. If I wanted to get an email, or even an email with a screenshot, we have the alert system built out to do that. You can make this thing throw a pop-up timer, basically work like an alarm clock. So, you know, you hear that ding, ding, ding until you actually come here and click it or close it on a timer. And this is in seconds. But you could send yourself a screenshot of this with an email. The moment any of these lines are touched, you can set this up pretty specific to exactly what you're after. So you just click on the alert, click on a line, and whenever price becomes within a certain range of that line, you'll get the alert, however you define it. We also wanted to be able to copy the lines from one chart to the next very easily. For instance, from one workspace to another, so that we could mark up our charts on the higher time frames on a separate workspace, and then have a smaller workspace with the faster charts with Bloodhound and Blackbird and all of that, and be able to copy those directly from the higher time frames to these lower time frames. We actually built out an indicator that will copy them. So this is the market geometry copy, and you can read it from the charts on this workspace or the charts on any workspace. And then you simply select the chart that you want to copy from, and it will copy all of the areas from any chart to the chart that you specify. And of course, we have the copy buttons. You can copy, you know, from one click chart to another click chart. And then of course, the Elliott wave system for super easy application of the Elliott wave analysis. So as far as what all other options we have on the toolbar, it is pretty massive. The biggest, or let's say the largest amount of code involved in this. Let's see, I'm connected to Market Replay right now. I don't know if it will actually download. Yeah, I think it will. Let's see. This is about the most massive section of code in this whole thing, the market, or the volume profile rather. And all of these areas are accessible as well from the reader system. I'm going to get into that a little bit more thoroughly here in a moment. We can access the bars that are inside of this developing volume cluster area, which is 30% of the volume within the profile that takes up the least range, the smallest range possible. That makes up the fattest amount of volume. So that's the developing volume cluster, and then the developing value area is here. We can access all of the bars within that value area or touching the value area high or low. So when it comes to defining areas, I can't tell you how many months, I guess it was probably about 2 years that I spent studying volume profile. I tried to read some of that market profile, you know, the original stuff from, was it Stottlemyre? It was Stottlemyre originally, and then Dalton, I think. I think Dalton wrote after Stottlemyre. I tried to read Stottlemyre's book, and I just couldn't do it. It's like reading a instruction manual for, you know, how to build out a program or something. So instead of going into all that market profile, I just focused on volume profile because it made more sense to me, really, because we were looking at volume, and that's something I've been studying for about a decade now. So I wanted to basically be able to access areas from both, from market profile, or volume profile rather, and the market geometry. When it comes to defining areas where you want to actually do business, where you want to trade, I would say volume profile does provide you with some pretty nice areas, especially when it comes to, you know, like the VWAP and the volume cluster, or looking at individual profiles individually, independent of the full range. So while volume profile does provide you with some interesting areas, they're more like kind of ranges and not nearly as precise as the market geometry is. So I did want both, and we've added that into the toolbar as well. And by doing that, we're able to draw in as many profiles on as many different charts as we want. Any of you guys that have used volume profile on any of your Ninja charts from any other vendor, or, you know, even some of the free ones, you'll know that if you're actually using tick data, you're going to be bogging Ninja down so drastically that you can really only use maybe a few charts max. But with this, you can literally have, I don't know, 5 or 6 per instrument, with about 4 or 5 different workspaces open, at least, as far as what I've tested. And that's because they're not actually added as indicators. They're more like drawing objects that are being built via a totally separate engine. So everything that we're doing is with a toolbar is basically like using Ninja as a canvas, and totally controlling all of the drawing from a separate, it's more like an add-on than it is an indicator, really. Rather than getting into all the details of that, just know that the profile is incredibly efficient, and you can do, you know, you can access the value areas, the point of control, the VWAP from any other chart into Bloodhound or Blackbird on a totally separate chart. Okay, so anything you want to do with the profile or the VWAP, you can do, and that's built into the toolbar. Of course, you have the workspace switchers. You can switch back and forth between workspaces. And with the fibs, I'm just going to go a little bit more into this, not too much. With the fibs, you can apply alerts to them as well, and then get a screenshot or an email or whatever you want out of that alert. But you can also delete the lines individually. So if you're doing fib confluence work, I think there's still quite a number of people that teach that, right? Carolyn Borden and Robert Miner, So a few other names that teach how to do fib confluence zone work, where you're basically applying multiple fibs all over the chart. And then you're looking where, this is a tiny little chart. This is a super fast tick chart, but just to give you an idea as to what I'm talking about, you're drawing in all of these fibs from different swing points and then looking at both retracements and extensions and seeing where they line up. Where are they overlapping? Well, they're overlapping right here for sure, and then right here as well. So we're looking at, just with these tiny little swings here, you got 2 right there, but you have 3 here and you have 3 right here. So those would be your fib confluence zones. And if you wanted to do what I just did in Ninja, you would have to, draw it in, and then of course you'd have to set it up the way that you want it, and then open it up, disable whichever lines, and then okay. And you'd have to do that with every single one of them. So that's what we've been trying to do, is to make this type of analysis as efficient and fast as possible so that you actually have time to take a trade. And now that we have all this programmed into Blackbird and Bloodhound, it's really just a matter of doing the analysis, basically identifying whether you want to go long or short. And then once you hit the areas, at least 2 intersecting, you'll get the signal, and Blackbird will enter the trade and then manage the trade according to the areas that you want to trail the stop behind and attach the target to. Okay, I'm not trying to say that it's, this is a fully automated solution, but we're getting closer to the point to where it's a little, there's still a lot of discretion involved in it, of course, but we're starting to take a little bit of that out piece by piece. So we're getting closer to some aspect of automation. It's at least semi-automated. Okay, and what we're doing in the trading room is, after I've marked up the charts, we're looking at crude oil and Nasdaq. I'm exporting all of my analysis here. See, I can export all of the analysis I've done for the entire NinjaTrader environment, all instruments or specific instrument or whatever. I can export that, and then everybody can import it. So this is the newest feature, one of the newest features that we've added, which is really pretty incredible that we can do that. So we can mark everything up, perform the initial analysis in the morning, send that file, basically just export it, and then linking everybody up to a folder on Dropbox, and they can just import it. So that's really, really pretty cool. Everything else, there's a lot of different little things that you can do. There's a screenshot button. You can show or hide the trades. There are all these different objects you can create. Risk to reward meter, which is pretty cool. It's about to be even better, actually, with the next update. And then a chart sync tool. Let me just show this for a minute, because this is really probably overlooked. This is the thing that makes manual backtesting so much easier. I have a little video on that. Would you guys find that video and just put it in the chat? I'm just going to show maybe one tiny little example here. What you can do, you can link multiple charts together of different instruments. You can basically put like a little label here, so X, and I could link Nasdaq and ES and whatever set of charts that I want to link if I want to see how different instruments reacted relative to one another. For instance, like intermarket analysis. If I want to do that bar by bar historically without having to use market replay, which can be pretty problematic, just actually scrolling bar by bar, I can use this little linking system and attach different markets together. So I'm going to scroll back. I'll apply this to one chart, apply it to another. Then I can scroll back. If I want to home in on, let's say, this swing low right here, I want to grab that and drag it into the middle of the chart. You can barely see it. This is really pretty cool. You see it lighting up there? Grab that, bring that to the center of the chart. See, multi-charts lets you do this. Ninja's global crosshair is a little bit problematic. It doesn't, well, it's pretty problematic. You can't do all the things that you can do with this, with that global crosshair. This actually lets you line up the bars precisely, and then say that I'm on the 30-second chart. I want to scroll bar by bar and not see the bar on the left until the time has passed for that bar to close. You see? And so we're waiting for all of the data to come in on the chart on the right that I'm actually controlling before we load the bar on the left. So that if you're doing multiple time frame analysis on your historical charts, you're trying to do manual backtesting, you can actually do it properly now with this little feature here. So that is the toolbar. It is a pretty massive program, and it is incredible. It's the most useful tool that we have for performing this type of analysis in any platform that there is. It's a really, really efficient tool, and it's an incredible time saver for this type of analysis. The other tools that we use, Divergence Pro, and then the Volume Analyst. This is Divergence Pro on the left here. It's a pretty sophisticated little algorithm that's taken, I don't know, it took at least a year and a half just to finally iron out all the different cases that come up that you have to deal with to try and find divergence properly. The way that we made it as efficient as it is now, or as specific as it is now, is through the use of these swings that we're showing here. Let me just turn everything on. I'll show the active ones. There we go. This is a tiny little chart, but let me blow it up a little bit. So what we're doing is we're looking at 3 different swing types inside of one swing algorithm. So if any of you guys have ever looked at swings, for instance, Ninja has a little swing indicator to try and find the swing highs and lows. You're looking at, it's basically a zigzag indicator, all of the ones that most people make. You're looking at a move from low to high to low to high. You're not looking at the highs and lows independently. What we're doing is looking at the highs and lows independently, not necessarily requiring a low in between the move from the low to the high. For instance, here, not necessarily requiring this low to be found for this high to be found. So we're looking at them independently, and in doing that, we're actually able to find all of the swing points that we would need to be able to find to identify divergence properly. So we're looking at minor, intermediate, and major swings. And of course, you can define those to be whatever size that you want in the properties, but doing it this way allows us to be much more accurate in identifying these momentum divergence swing highs and lows. Okay, so the major swings are these little circles. You can make them, whatever object you want, whether it's a dot, a little circle with a hollow center, a square, whatever. And we're counting the number of ticks from low to high, or basically multiples of the average range of the bar. So you could display this in ticks or average range. I think we're going to be adding volume in when we go to Ninja 8 and a few other different features for this. So we're going to do a complete overhaul of this for Ninja 8 over the next couple of months. But anyway, doing this, having these different swing points, 3 in 1 basically, to identify major, intermediate, and minor, it allows us to define the swing points that we want to use for the algorithm. Of course, if we don't want to use these little minor swing highs and lows, then we eliminate them. We just use intermediate and major. If we don't want to use the intermediate swing highs and lows, then we just set it to major. So you have full control over the exact look to divergence that you want. And let me see, I am connected to market replay. I haven't enabled Blackbird yet. Let me see if I can get away with making some changes without messing everything up here. I'm going to change this to both so that you can see the hidden divergence that we have as well. So this is a hidden divergence signal right here where it's, the opposite. I don't know if you guys don't know about, what is momentum divergence. I'm not going to get into that right now. If you don't, we have some videos on the website that will explain all of this to you. As far as, what this is that we're looking at. This is reverse divergence or hidden divergence or type 2 divergence, as some people call it. And we added this little signal in, which is hidden to regular divergence. So it's, only identifying a regular divergence after a hidden divergence for this specific type of a signal. Of course, you can access all of these inside of Bloodhound or Blackbird or a strategy. We have double and triple divergence, which you see here. I'm going to turn all these off now. I'll leave some of them on. We're also looking at the swing highs and lows that have not been broken and how far away they are from price. And that's what these lines are, just to make that clear. Yeah, by the way, guys, I am not really interested in trying to convince anybody of anything. I'm not a marketer. I don't care to be. I'm just kind of showing you what we have and making it available essentially because I have to. I do love helping people. I love working with people. I love working in the trading room. But believe me, if I didn't have to be marketing this stuff, I honestly would not be doing it. I mean, this is like it's like my life work, basically. This double and triple divergence signals you're basically looking for multiple consecutive momentum divergence signals. And we're counting up to 3 in this one, and the next one we'll count up to 5. And what we're doing with these triple divergences is we're trying to identify that kind of 3 moves into a high or 3 moves into a low. It doesn't always identify those perfectly because I'm not trying to be, extremely specific as to what's allowed and what's not allowed for that pattern. We're just trying to find 3 consecutive divergent signals in a row. And oftentimes that ends up being one of those 3 drives to a high or 3 drives to a low pattern. So this triple divergence and double divergence are really powerful signals, especially when you see those at an area, So that's the divergence. You can bring this into the tick or advanced decline line. So what we can do with this Divergences Pro, with this little user interface, we can bring in any other oscillator or any other instrument. So I'm actually bringing in the tick Q right now, which is the upticks divided by downticks or upticks minus downticks for the Nasdaq. So this is a little index made from the cash market looking at the number of issues going up versus the number of issues going down. So it's what's considered a market internal index. And we just changed the preset here. So we have multiple different presets depending upon the indicator that you're bringing in or the instrument that you're bringing in. So we're setting it to other instrument as we're bringing in another instrument. I'm going to set this to both regular and hidden. This is a pretty serious algorithm. And it changes all the settings for me automatically. Of course, you can select a little further if you want to look at different swing points. I'm going to look at intermediate and major. And I just need to make sure that, what time do I have it set to here? I got it set to market replay. Well, let's see if it'll still show it for the historical. Market replay doesn't let me download all these market internal stuff. You just have to set the same session template as the indexes, which are, the cash market, the US equities RTH, and then it'll line up with all the previous data for those tick series for all the market internals. Wouldn't you know it? That's why you don't use market replay in a presentation. While that's loading, I'm going to walk you guys through an example in Blackbird. This was the most recent example that I could find. And this is from yesterday in the Nasdaq. So we just looked at that big downturn in the Nasdaq. We just had that big sell-off, right? Right at the end of that 5-wave move. So we have the big push down and then essentially went up from that low, kind of straight up into the high, and then it came down all night long here, right? So this is the low Friday morning in the Nasdaq, and we're looking at essentially a C wave that's going up. So it's pretty obvious here. Let me start this over. All right, I'm going to start Ninja up here. What I'm doing now is I'm turning Blackbird off, and now I'm going to apply the analysis to the different charts here. So I'm just simply looking at, I mean, I have a pretty good handle on this already. We've already made a really nice ABC low and a strong impulsive move up. And this is, basically Elliott Wave 101. We have a perfect 5-wave move up into the high, and now a really sharp push down. So we would expect a C wave up. I mean, we have a tiny little A wave up here and then a B wave down. We would expect a C wave up to correct this initial push down and then another wave down. Okay, NASDAQ can be a little tricky though. A lot of times you'll see these really sharp moves and a strong trend that stop on a dime and then reinitiate the trend, but we'll see what happens here. But at least we're looking for a C wave up. And I'm just drawing in from the previous high before the low. So that was the last area where supply came in before that swing low there. So that's what I'm looking at. We've made the bottom of that channel perfectly. So we would expect a bounce anyway. I mean, it's, market geometry 101 here. So we're looking at only taking longs out of this low. So even into the open, because the average range is so incredibly high, anytime you get these massive sell-offs, average range picks up, and the moves that you tend to get during the day can be pretty dramatic, and you can do a lot of damage to your account if you don't know what you're doing, especially. Everything that we've defined inside of Blackbird is all based on the average range. So it's going to, self-adapt, auto-adapt to whatever the market conditions are. And of course, you decide whether you want long or short. And in this case, we want long. So we have that nice A wave retracement back up right to the midline of the channel, perfectly to the midline, which is basically like a rolling 50% line. But it was such a sharp correction that it hit both the midline and the 50% retracement. Then came down to hit that channel as a higher low. So that's another reason we're looking for another push to a high, because it's hit the major area in the market geometry without actually making a new low. So we're looking at finishing that correction back up in a C wave. So we're looking for an impulse up, essentially. Okay, so I'm just kind of marking out, what are the most obvious areas here. This is the 2000 tick. It goes from a 30-minute to a 2000 tick to a 10-minute to a 3-minute to a 400 tick to a 30-second chart. So those are the those are the charts that I have on this workspace. Let me just show you this briefly. This is the tick. I'm not connected to Market Replay right now, so it's fine. It's just when I'm connected to Market Replay that things can get a little hairy. So this is the tick market internals. So if you guys are interested in looking at advanced decline line or market internals of any kind, really, or even comparing different instruments together, let's say any stock relative to its sector or something like that, or ETFs or something like that, you can do that now with the Divergence's Pro algorithm. And then you can, of course, choose whether you want to see the setups and the triggers. I'm not going to go into all that. It's quite a bit of detail. There's more info on the website if you want to know more about that. But this is it's really the only divergence algorithm that does what this does. It actually finds all of the cases of divergence as accurately as possible, with giving you as much room to specify precisely the way that you want the divergences to look. If you want the oscillator or the instrument in the lower panel to be a certain distance from that previous low for the higher low, you can specify that. You can really specify anything you want. The retracement between the two swings, you can specify that. You can use a fib retracement as the trigger. There are too many features on this thing to number, but when it comes to defining exactly what you want for the divergence algorithm, so that they look, precisely the way that you want them to, there's really no other tool that can do what this does. This is the 2000 tick. What I'm doing is just marking up the most obvious swing points. This is clearly the major low and the major higher low, and we've turned up out of that since about 5 a.m. So that's the major area on the 30-minute, and we're turning up. I know if you're looking at this for the first time, it's probably a little overwhelming. Like I said in the morning during the trading room, I've begun sending out all of my analysis after we do it, after we mark everything up in the morning, so you guys can import that, especially if you're new to it, to kind of get you familiar and help you apply the stuff properly initially. So here on the 10-minute chart, I'm doing the same thing. I'm marking the major highs and lows. This is where obvious demand came in. This is the area of supply between the two areas of demand, and this is the next area of demand. And now I have a clear area for support, and that is that lower median line, which is so often the exact area for the higher low. Now I'm just looking at, on the 3-minute, what are the major swing points? Well, we have a major low here, major low here, here. This is the high between them. So we have a perfect little, what's that called? Kiss goodbye line. We have a down sloping channel. We've broken out of the top of it. If we pull back to it, that's going to be what? That typical kiss goodbye pattern that we always see. I even have the retracement lining up perfectly there, and then a fib extension making a confluence zone right there at 61. So that's lining up with that kiss goodbye line. And see, that's that little symmetrical move I was talking about a little bit yesterday afternoon. So the distance from here to here, including time and price, I mean, this is a tick chart, so we're not really, we're looking at time independently. We're looking at just number of contracts that trade, or the number of transactions rather, the number of trades per bar. So from the low here to the high is about the same distance in price and bars as it is from this low to this high. That bar is essentially intersecting both. Well, it is intersecting both that center median line and that auto line, that channel line. And that's a really nice area oftentimes. It's also the midpoint of that channel that I just drew there. So now I have an area that's a little bit lower down that you saw on that chart, not really lining up with my other areas that are at 61. But I have a clear, very clear area where demand will likely come in at 61. And of course, if I see the volume come in, if I see the volume signal come in at that area, which I'm seeing right now, then the close of that bar will give me a trade, okay? When that just went in, a limit order offset by 3 ticks went in just behind it. So it gave us just a little bit of a better fill, a little bit better price. So when I hit market, it basically, it moved up and down about 4 or 5 ticks within a second, as it was basically capitulating there at the low. So that was a perfect hit of all of those different areas. Now we're only requiring 2 different areas, but I think at that point we had 3 or 4, right? You have this upsloping lower median line, which what I've done just now is change the color of it. And that's what is trailing the stops inside of Blackbird. So Blackbird will actually attach these stop loss orders to that line offset by the average range of the past 100 bars on that 30-second chart. So multiples of that average range. On that 30-second chart, I think typically average range is about 3 or 4 ticks. So order set A is looking for a little bit tighter trade. So we're not looking for, areas that are very far away. We're looking for a little bit closer areas for order set A, and then order set B, which gets filled on that limit, that offset limit order by 3 ticks. With that one, we're looking for a little bit larger target. And of course, you can change these on the fly. I'm going to show you some of that too. I mean, you can do whatever you want with Blackbird. It's, you can fully automate the trade management. Then you can make a change on the fly, which will disable the auto management. And then you can re-enable the auto management after you make a change. So you saw what just happened at the close of that 30-second period. These stop loss orders tightened up behind that red line there, that crimson line, which I'm changing the color via that little button on the toolbar. Any questions about how any of this stuff works? As far as, what you've just seen now, is there anything that's not making any sense to you? I'm basically using the 30-second chart to put Blackbird on so that, we're only running the calculations once per bar. There's really not any calculations because of the reader system that we've developed, which is essentially just accessing the values of all of these different lines and indicators. So there really aren't any. The only calculations are the average range calculations and, whatever is necessary to produce the signal in Bloodhound. But all of the inputs in Bloodhound are simply accessing the values of the indicators in the lines. They're not actually running the calculations for those indicators. So it's pretty light on Ninja. But the fewer bars that we have on the chart that Blackbird is on, the more quickly it will operate with ticks coming in and bars closing. So I want it on a 30-second chart so that I'm not having to wait for a full minute to pass before I initiate a trade. 30 seconds is really fine. I mean, maybe sometimes I get in exactly where I want to, and then other times maybe a few ticks away, several ticks away potentially. And then after the trade is sent in, the stops and targets go in at multiples of the average range of that 30-second chart. And then I am defining the area that I want to trail the stop behind. So I'm just simply changing the color of a line on the 3-minute chart, and that will attach the orders inside of Blackbird to that line on the 3-minute chart, and it will trail that line based on multiples of the average range on that 30-second chart there. Okay, and then I set a profit target on the 3-minute for order set A. And then for order set B, I set a little bit larger profit target on the 10-minute or the 2000 tick. And you can do both if you wanted to, and it would simply use the one that is furthest from price. So here I'm just kind of changing my mind back and forth. I was going to set the exit to that center median line. I did that first, and then I changed my mind and changed the color of this channel line to spring green, and now that order is attached to that line. It's actually inside of the line by about, I think it's 3/4 of an average range of the past 130-second bars. Yeah, Bart, I use the divergence. Let me just kind of show you what I do there. Hang on one second. Let me bring up the rules. Here we go. So this is the most recent template. I'm still in the process of modifying the templates a little bit as I'm, found a couple of issues with what I had done last week. And then I've been really modifying this and homing it into exactly what I'm looking for. And what I've done so far is to break the different corrections up into essentially 3 different types here for now. I'll be making this even more specific as the weeks go on. But I'm looking for specific rules for these really tiny corrections, which I have never traded in the trading room. I think I did that for maybe the first couple of months when we started a year and a half ago. But I kind of refrained from looking at those really tiny corrections because I didn't want to validate over trading. I didn't want to validate, people looking for really tiny retracements and corrections and then end up, taking 4 or 5 losses in a row in one day and then spiraling out of control. So what we ended up doing was really focusing mostly on corrections that would have an operative time frame of the 20-minute chart, the hourly chart, or the 240-minute chart. So we were taking maybe 1-2 trades a day, every now and then basically no trades per day. I think we would have on average 7 or 8, 6 to 8 trades per week as we were doing that. But now that we're using Blackbird, I'm trying to basically allow some of those smaller corrections, specifying the rules precisely so that we're getting more signals during the trading room, and you guys can get familiar with how all of this works and using Blackbird and all of that. So I'm kind of breaking my own rules a little bit by allowing these tiny corrections. So these tiny little corrections that last between 30 minutes and 2 hours do not require divergence. So all the divergence is up here. But then the corrections between 2 hours and 255 minutes, a little over 4 hours, do require divergence, okay? But if there is an extreme spike in the volume, or an extreme climax rather, on the 3-minute chart, then it would not require divergence there for these corrections. And that's the example I'm going to show you in the Nasdaq as soon as we get done here. So the example that I have brought up will show this little if-then statement. If we have an extreme climax on the 3-minute, then don't require divergence. So there's different types of corrections, right? And a lot of times that's the end of the C wave will produce a V bottom or a V top. And that tends to look very precisely one certain way. And depending upon the operative time frame, you'll get, if it's at a low, a really big selling climax. If it's into a high, a really big buying climax, and then a sharp move the exact opposite way to reinstate the trend for that trend continuation move. All right, so those are the rules. Of course, looking for the volume confirmation there as well. Different rules for the different sizes. And then these are the rules for the order management. I'm still refining this a little bit. It's close to the way that I want it, but I've changed some of these delays. It's going to have to be a little bit different for the Nasdaq than it is for crude. Nasdaq has a pretty massive average range here lately. So anyway, that's kind of the gist of the rules there. So what I'm doing now, I've attached the order to that line on the 3-minute. So now I need to go and figure out, what do I want my profit target to be on that second order? So do I want it to attach to an area on the 10-minute, or do I want to attach it to an area on the 2000 tick? Well, I'm interested in actually making it all the way up to the top of that channel, but we have a couple of areas in between that could potentially give us some pretty serious resistance and at least cause some kind of retracement. So I'm going to just exit at one of those initial areas in the way, and then see if I can't get back into the trade after it hits one of these areas and then retraces a little bit. So that's what I'm doing here. I'm just defining, where do I want to trade to? And that's one of the main problems that people have, is identifying, well, where do I want to trade to? Am I going to just simply exit on a fixed number of ticks, or a fixed average range of the past several bars? Am I going to only go for a 3-to-1 reward to risk every single time and just leave it at that, have fixed stops, fixed targets? Or am I going to let the market dictate what the potential is on the trade. And of course, you want to be adaptive when it comes to the market because the nature of price action. It's not random, it's chaotic, right? And you want to be able to figure out, well, what is the trade that you're taking? What is the operative time frame? We've just had an impulse up here on the 3-minute. We've had a correction back down. So chances are the next impulse will be to the upside and we'll break that high. There's no sense in me looking to exit right in here before we've taken that high out, you see? So there's all these little things that you need to know in order to have some kind of idea as to where your profit target and stop loss should be. And most people have no idea what I'm talking about when I'm talking about that. That's one of the great things about market geometry. It dictates to you, or it allows the market to dictate what the best areas for your profit target should be, and then the areas that are protecting the trade, that if those areas are broken, then you should be out of the trade anyway, you see. Yeah, so we just had a little retracement here. We hit that median line, and that's where I had the target initially, at that median line, because that's an area that you can expect to make it to quite often. I think the rule is 80-20, but who has proven that recently? I have no idea. The idea that, or let's just put it like this, Alan Andrews created these median lines, and he claimed that out of a low, when you connect to the low, from low to low, and that center median line is upsloping, 80% of the time you'll actually make it to the median line. So that should be considered as an important target. But that's, of course, assuming that you got in near the low. What if you got in up in here, you were waiting for quote unquote, confirmation with price action moving in favor of the trade? Well, then that would be a tiny little target in this case, right? But that's supposedly the rule. Supposedly Timothy Morge has proved that out as well, but I've never seen the work. I've never seen the statistics or the spreadsheets. None of that. But as far as I can tell, it is pretty accurate. You do see this quite often. Sometimes you'll go right through it and then pull back to it and then go. Other times you'll just go right to it and reverse. So that is one of the typical targets that we'll look for. But when it comes to a 3-minute chart, I'm not interested in 15 or 20 ticks here. I'm interested in actually getting what the trade is potentially providing for me. So it's just retraced all the way back to the same exact area that we traded. And you see that kind of thing happen all the time. And when you're tightening up your stops too quickly initially, that's the notorious move that will get you out of a great trade. Goes right up initially, you're super happy, you didn't have any kind of negative adverse excursion on the trade. It just went straight up out of your entry. You went ahead and got happy and tightened that stop up to break even, and it comes back and one ticks you out and then goes. Can't tell you how many times I've done that. So with Blackbird, that of course is going to be a thing of the past because you're not tightening up to break even. You're tightening up your stop behind the area that's protecting the trade. What you just saw happen here is that stop loss for order set B just tightened up to within, I think it's 4.5 times the average range of that half-hour bar. So why did it do that? It did that because we had volume divergence on the 3-minute chart. Okay, so what I'm doing within Blackbird is I'm actually accessing Bloodhound from another chart. So with this whole reader system that we developed out, what I've been telling you about, like that allows us to access the values of all these different lines and indicators from all these other charts, we built out a universal reader as well. I guess we're just calling it the indicator reader for lack of imagination, but what that indicator allows us to do is actually access the signals from Bloodhound on another chart. So what I've done is I've programmed out volume divergence, which is one of the main reversal patterns that we look for confirmation, especially when it comes to corrections on a 240-minute chart or an hourly chart. We actually require volume divergence to get into one of those trades. I've programmed that out inside of Bloodhound on the 3-minute chart and the 10-minute chart. And now I'm actually accessing that signal from that other chart from Bloodhound inside of Blackbird as a trigger. All right, it's one of the many triggers that I've developed for trailing these orders. So once the trade is up 60 ticks, you can define that however you want, but I just set it to whatever 60 ticks based on typical risk that I'll put on per each market. So once we've met that kind of minimum amount of money that I would like to make on that order set B, once we've hit that, then if we get one of these typical reversal patterns, I want to tighten up my stop, still give it enough room to, sometimes they just kind of keep on going. Still give it enough room to work itself out and keep going if it's going to, but then not give all of that money back that I've just made, which I've been notorious at giving money back on some of these really great trades. If you guys have watched any of those recordings of the trading room, the first one on the list from the previous Friday, that set of recordings is of an entire week. And the first recording is from the previous Friday before that entire week. If you're watching that one, I'm starting off in this really great crude oil trade out of this perfect volume divergence signal. And I think I'm up 72 ticks. And I end up giving back most of it, I think. I can't remember how much I gave back, but I gave back an embarrassing amount of ticks on that trade in front of a lot of people. And yeah, it's pretty embarrassing. But now with Blackbird, that will never happen again. So having the ability to trail the stop loss orders and the profit targets relative to any set of instructions that I give Blackbird, I've got volume divergence on the 30-second on order set A. I've got volume divergence on the 3-minute for order set B, and I can add in whatever else that I have in my little arsenal of indicators and reversal patterns as trailing triggers that will tighten that stop loss up to within whatever number of ticks or average range multiples that I define, and be sure that I'm always locking in at least a good portion of the amount of money that I've just accrued on the trade without actually closing it. All right, so what you're seeing now is I'm continuing to get that volume divergence signal on the 3-minute, and that order set B, the stop loss is trailing based on that volume divergence on the 3-minute. So I've just closed. I've just hit the profit target rather for order set A, and it was attached to the top of this channel basically. But that channel was on the 3-minute chart, which is here, you see? So my profit target was trailing that line right there. And you saw the volume divergence signal there. You see? It's based on this massive buying climax, sign of weakness, and going back up, attacking the high, breaking it, but doing so on less volume. That's volume divergence. If you don't get anything else out of this presentation, just knowing that little pattern right there will give you at least some kind of edge as far as trying to identify some of the ends of these corrections. That little volume divergence signal right there is pretty golden. And see, I can do whatever I want with these orders. I can tighten them up, I can move them, but the minute that I do, it disables the trailing rules that I've defined inside of Blackbird. But that's fine because you can always reinstitute or re-enable the trailing rules. So anyway, we've come up, we've hit a major target, and I went ahead and closed the trade out. So I dragged that second profit target down and closed the trade out. So you can always do that, but you don't want to do that from any other chart. The orders will show up on any other chart that you have Chart Trader active on. You know, if you move one of those orders on another chart, then it will disable Blackbird altogether. What you're looking at now is the open in the Nasdaq on Friday. And when it opened, it popped right into that channel again, and it started moving down. The way that I defined this inside of Blackbird was that we weren't going to allow any trades between 8 a.m. and 8:33. So it'll trade between 7 to 8, but then between 8 and 8:33 Central Time, you know, that's the open in Chicago, 8:30. It'll wait at least 3 minutes before it will let you get into a trade, and I think that's you know, that's kind of the minimum, 3 minutes. I used to wait about 5 minutes, but more and more I'm seeing right at the open, especially in these massive moves to the upside, within the first 2-3 minutes, that low of the day is found, you know. So I'm allowing it within or just after the first 3 minute period. All right, so what I'm doing now is just kind of identifying, well, what is the next major area that I'm looking for? And it's looking like about 69, 68. I'm just kind of cleaning up the chart a little bit, just leaving the most relevant areas there. So this is the opening bar there on the 3 minute chart. Now I have my pretty clear lower median line for the area. And here on the tick chart, it looks a little messy, but these are called warning lines. So when you break out of a set of market geometry, these are the next areas. And I'm drawing those in automatically. You could disable them, or you could just simply hide them with a button. And that's this little button right there. That's what I just applied very quickly. You see? Right there. So now you see them, and now you don't. I just messed it right there. Well, anyway. So here we got a signal, but it didn't take it. You saw a little error message there. It was just telling you that the trade was not taken because it was not within the time allowed for automated trading. So it's not going to take any trades that show up between 8 a.m. and 8:33. But this next bar is right into the perfect area where everything's lining up. Now see here, this is again one of those symmetrical moves. We have area where supply came in, last area where supply came in, the area where demand came in between those two, and we have the center median line intersecting that channel right there with that bar right there, which is a massive churn bar. That means that it's very high volume per range, and it's also a large number of contracts per tick, which is telling you that you actually have some big money coming in right there. You have people coming in, and what is this, a 400 tick? So it's like 1.4 contracts, or 1.4 contracts per tick, which doesn't sound like that much, but the average is typically just a little bit over 1 contract per tick. So you have a few more traders coming in that are putting on 10 lots and 20 lots, as opposed to just the typical 1 and 2 lots of most retail traders. So somebody that knows a little something, somebody that's probably trading market geometry, is coming in and buying that area right there, and it's showing up in the volume. And that's what's so pivotal about the volume. It creates pivots. It's what shows up at these major turning points throughout the day. All right, so this is right after the open. So we've come down for pretty much exactly 3 minutes, 3.5 minutes. Hit that lower median line and that symmetrical move on the tick chart, which lined up so perfectly, which is why we use both minute and tick charts. You really have to. And it's turning up pretty ferociously now. And I'm just attaching the orders to the different charts, the 3-minute and the 10-minute. And right now, I'm redrawing this line to try to identify a target a little bit further away. I have a pretty good idea that it's going to break out of the top of this channel just by the force that it's moving after the open. And of course, I'm looking to break this prior swing high ultimately. So I don't want to try and get out at the top of this channel when, you know, I'm thinking it's about to be going well above 5,900. And now I'm just redrawing. We're at that channel now, which would have been a potential target, but based on the higher time frames, I'm expecting a much larger move to the upside, which will, you know, probably continue tomorrow night and Monday. Here I've just drawn in volume profile from the low, from the open basically. This is the open, but from the low after the open to get an idea as to, you know, the volume that's developing out of this move, and just showing you how that looks. And you could potentially attach orders to that VWAP or one of the standard deviations of the point of control, or, you know, whatever you want. So right here, that stop loss order has just tightened way up pretty close to the last price. And why did it do that? It did that because of this volume divergence that we just got here on the 3-minute chart. So it's trailing up pretty tight now. And what I'm showing you now is I'm just tightening this thing up, that stop loss A from the first order set. I'm tightening that up manually just to show you how you can do that, and then how you can re-enable the, well, I'll show you here in a second too when we go to that 30-second chart. What I did here is I attached one of the stop losses, sorry, one of the profit targets to that 78.6 retracement, which is, you know, so often, especially in crude, one of the reversal points, one of the major areas for a second wave, for instance. So I have one profit target sitting there just in case it doesn't go any further. And that's where that stop loss tightened up. And now I'm setting the last profit target to that midline there of the channel. But rather than waiting for it, I just tightened it up manually to show you the order monitor over here. So if you move any of the orders, it's going to disable everything, but you can reattach them using these buttons here. You can go to, you know, global break even. All of your trades will go to break even now. When you click on that button, full control over anything you can think of, really. All right, so it's about to fill here. And rather than waiting, I just saw a reversal bar, so I went ahead and tightened that profit target down to fill it. Let me see. Let's see. All right, I'm going to show you an example here live. So this is after filling that order that you just saw. And I'm looking for a little correction back down to try to get back into this move. So it looks like I missed, nope. This was the end of that move right there. I have this one recorded as well. But what I'm doing now, I traded this in a recording. I'll make that recording available later. But what I'm looking for at this point is a move back to the bottom of the channel, very simply, and where that channel is intersecting with this area here. So they're both coming together about the same price right there, between 5,900 and 5,904. By the time we get there, it'll probably be 5,901 or 5,902 or something like that. So right where those two intersect, and that's the typical kind of look that we're looking for. You have a correction with the areas sloping against the trade, and then you have the main channel that the market is actually developing in. And this is the kind of thing you see over and over. It's just a matter of knowing this stuff, really. And you see all of that is coming together right here. It looks like 5,903 currently. And then in a few bars, you know, this line will be maybe a little bit higher. These lines will be just a little bit lower. And we'll have one of those symmetrical moves, you see. We have the median line intersecting its channel right there. And these little shaded lines, those are called throw over areas. And currently they're just based on the width of the channel. I have the ability to set them to the average range of the past bars, but I don't think it's using enough bars. I think it's only using 50, but it needs to be, I think, at least 100, probably more like 200. So when you set it to multiple of the average range, it's a little bit too, it changes too much from one set of, you know, one part of the day to the next. So I'm using width of the channel, and it's set to about 12.5%. So basically when the market moves through that little opaque area, then you would consider that area no longer valid, essentially. All right, so what I'm going to do now is turn Blackbird on here. So I right click on strategies. You have to be connected to the data feed, obviously. Load Blackbird. Add the right order settings here. It's for the Nasdaq. This is the one that's actually accessing the volume divergence signals from the 3-minute. It takes a minute to load. Okay, there we go. So this is the stop for order set B, and I have multiple different triggers and delays and actions. So the initial one is waiting for an area to be defined, a crimson line to be defined on the 3-minute chart. And when that area is defined, it will attach the order behind that line, because I can actually access any of these different charts. See, 3-minute, whatever, any of these different charts, any different colored line, and I set it to whatever I want. And then it's going to offset that by 2.5 average ranges. And it's only going to move in favor of the trade. It's only going to move with the direction of the trade. So this is the one that's looking for, you know, do we have a crimson line on the 3-minute chart? If so, initiate the trail. This is the one that's looking for volume divergence on the 3-minute chart. It's just a simple little solver with that indicator reader that's allowing me to access Bloodhound from the 3-minute chart. It's pretty amazing. So this is actually giving you a list of all the different indicators on all the different charts. And then I'm attaching it to one, which, you know, this is not possible on any other platform. This is what makes this stuff so amazing. Being able to access all the different values of all the different indicators, whatever we're using from any of the different charts. It's really pretty amazing. This is the same type of a thing. We're looking for that 3-minute area. crimson line on the 3-minute chart. And then once we see it, then we're attaching the order right behind that line here. And then a bloodhound divergence signal, volume divergence based on this 30-second tick, all right? And then the profit target. So the same kind of a thing, it's attaching to, this one is attaching to the 3-minute, and the other one is attaching to the 10-minute or the 2000 tick. So you can really define whatever you can possibly think of inside of Blackbird, any kind of trail, whatever sets of rules from moving the orders to do really anything that you could possibly think of. So I'm just going to save that, turn it on, and then turn on market replay here. I'm going to enable it. And now we're good to go. So once these rules are met, which I've clearly defined inside of Blackbird here, once any of these rules are met for the different sized corrections, this thing will take the trade and then it will manage it according to the rules that I've defined inside of Blackbird. This is next level stuff here. It's crazy that we can even hope to be able to do anything like this, but now that we can actually do it, it's mind-blowing to me. So this is another pretty clear area that we have on the 2000 tick. It's just simply low to low. That's the upsloping lower median line that we found support on once before. Look at where we found resistance. Right where those two lines intersected. And now it's turning down and heading for the bottom of that channel, this little tiny channel, right where that line is intersecting it. That's the obvious spot for a potential long. Pretty obvious. And we have this channel actually showing up a little bit sooner than this upsloping channel. So it looks like it's probably not going to actually make it to the bottom of the channel in the 3-minute. Let's see. I'm going to make sure that shorts are disabled here. So when we break this low, we get a big selling climax, which is a big selling climax on the 3-minute chart, which is the reason why I'm not requiring divergence at the end of this move, because of the fact that we have that big selling climax on the 3-minute chart. And there it is. That's that symmetrical move. And we're at the 400 tick, the 3-minute, not quite to the 10-minute, but we're making a pretty nice looking selling climax right now.
Order pending.
And there the order goes in by Blackbird based on the rules that I've defined in this template here, but not requiring momentum divergence when it's a certain sized correction and it's a massive selling climax on the 3-minute chart. That's this rule right here. We had this happen in crude Thursday and Friday, and I'm not sure about Nasdaq Thursday, but this definitely happened on Friday as you're seeing it right now. And that's this little rule set right there. So not necessarily requiring momentum divergence on specific types of selling or buying climaxes. So I'm going to tighten this limit order up a little bit and see if it'll come back and fill it, and then go ahead and start thinking about, okay, where do I want my stop losses and profit targets? Well, clearly, if we break below this channel, then it's probably going to fail anyway, so I may as well get out of it. So I click on that line, click on the stop loss button here, which is just a recolor button that changes it to crimson. Okay, that second order just got filled. And it tightened up order set A stop loss behind it already.
Order filled. And
now, what just happened? It just stopped me out of something. Hang on a second. Oh, okay. This is one thing that'll mess you up. I had a, I copied the green line here. You see that? You guys saw me do that? I copied this line and placed it right there for order set B. So what that did is it tightened up the profit target to the current price. So that's the one thing that you have to be mindful of. If you're in a trade, you've taken a trade and it's exited, then you need to go back and change the colors of those lines. You see? So if I wouldn't have copied this line and dragged it down here, then that order would have attached to this line right here, you see? But because I copied it and placed it so close to the current price, it dropped the profit target to that line. I can, you know what? I can actually, I can just add another set of rules here to check whether, well, I have to put some kind of a maximum and a minimum on there, but I can add another rule that this is what I've been doing the past week, is thinking of all the different ways that somebody could potentially mess up to try to make this thing foolproof. And that one there I hadn't thought of yet is, you know, what if you had a line and you placed it exactly where current price is trading? But what I could do is I could check the value of that line relative to the current price. And if it's, you know, within a certain range, then ignore that trail. Don't trigger it, basically. So I can deal with that. I can fix that. It's not really, you know, a problem with the system. It would be a user error, essentially, as you just saw me commit. So now, I was going to look for one target for the big order, one target for the small one, but I'm just going to move this. Yeah, I guess I'm just going to put it right here. So that'll tighten up and it'll trace that line down. So what I could do, you know, I got the order in, I have my stop and my target. It's an order cancels order set. If I had to go somewhere, or, you know, I had an appointment or whatever, I could leave this and let it go and not have to worry about trying to manage it, because I have all of those management rules clearly defined inside of Blackbird. And this is really what I've been trying to get to. This is the point that I've been trying to reach for about the past 4 years. It's taken me about 4 years to get here. As far as, you know, this particular style of trading, but being able to access these lines and the volume signals and divergence from all the other time frames and be able to actually manage the trades based on those rules in an automated kind of a fashion. This is it. It's where I'm finally there. Finally there. Yeah, me too, Richard. Is it possible to modify the copy function so that if the line being copied is a profit target, then the copied line color is not the profit target color? Yeah. I mean, as long as we had a setting for that in the recolor button properties here, like is profit target true or false, is stop true or false, then set to another color and have that other color defined. I could do that, yeah. So see, it's tightening up with that line there. And what I'm going to do now is I'm going to simply tighten this thing all the way up and trail behind that upsloping lower median line there. Wait for it to turn up again. If it does, I don't think it breaks that line. Let me see. I want to wait for it to turn back up. Okay. There, now I'll trail it. I don't know if you can hear all those little noises, but Blackbird has all these different little alert noises. When it moves up one tick, it sounds like a little coin flipping. When it moves up several ticks, it sounds like a bag of coins hitting the desk. They thought of everything. All right. So that is Blackbird for you. Pretty amazing program. And of course, you can use this as an advanced chart trader. So I could just simply, go short now. And all of those trailing rules that I've defined in the order settings here will now apply to whatever manual order set that I initiate. So I can, feel comfortable putting on a discretionary trade and walking away after I've set up the areas that I want to trail. I can be confident that Blackbird is actually going to, excuse me, actually going to follow those rules and trail the stops and trail the targets according to the areas that I've defined. So if I would have allowed short signals here and not taken that manual trade, it would have just taken this automated signal right here. But remember, we're expecting Nasdaq to break out to new highs. I think it does turn down here a little bit, but on Sunday and Monday, we're still looking for a new high. So because we got that signal there, just tighten it up. You can set the signals to really do anything to the orders that you want. It just depends on how you want it set up. So really anything that you can think of, you can do. And now because it's approaching the close, it's disallowing any of those signals. It's not going to take a trade the way that I have it defined after 245. So that was really right back in here. Pretty awesome little program, really. You can find the other recording from part 1 here. So this is the sale page. Blackbird is actually only on sale until tomorrow night. So this is the sale page, our sale page. You guys see a little chat window that you can access? I just put a link in there. It's a link to this page. This is a recording from part 1. Blackbird is $1,000 right now, $9.95, which is a massive discount, and that's on sale until tomorrow. Our software, the Master Suite Ultimate, with all of the readers, the toolbar, Divergences Pro, volume analysts, the trading room, a massive amount of training material. I think we have 500 pages in PDFs and training material. We have a full, I think it's 140 pages on market geometry and how to apply it properly. The rules and guidelines document, a learning plan for Elliott Wave, a lot of different resources for learning Elliott Wave and market geometry, and then over 200 something hours of recorded training sessions and training material. But really the best way you're going to be learning of course, going through all of the documentation, user guides, and PDFs and videos, is by participating in the trading room and then having access to my exported objects, all of my analysis, and being able to import that after I finish the higher time frames and marking up most of the charts in the morning. Having access to that in the trading room is going to be pretty key to helping you learn how to apply this stuff in real time. And that's really what it's all about. You want to be a good trader, you have to be a good analyst. If you think that you're going to somehow develop a fully mechanical system that's going to be able to adapt to the market and you're going to be able to flip a switch and make money, think again. Fully mechanical systems are, it's possible. There are people that do it, but it's incredibly difficult. And as far as everything that I've learned over the past decade, I've been studying this stuff pretty intensively. You want to be a good trader, you want to make money, you have to have a solid understanding of the market. You have to be able to identify where the corrections are going to be ending, what those corrected patterns typically look like, and how to trade them, how to confirm them, understanding the way that volume creates price action and what these major reversals look like in the volume. So you have to be a good analyst first to be able to identify the areas that you want to trade. And then you want to have at least, some set of rules that you can measure your performance against. So while it is a discretionary system, really, because you're having to apply the market geometry analysis, we do have some set of rules, pretty strict set of rules actually. And now that we're using Bloodhound and Blackbird, it's getting even more refined, but you do have the rules necessary to measure your performance and whether you're actually performing well or not. And that's really how you make improvement, is by monitoring your performance and making adjustments as needed. And that's really what trading is all about. It's performance based, right? You have to be able to measure what you're trying to improve. And of course, if you're just flying by the seat of your pants and not really knowing what you're doing, you're never going to improve. So you have to understand the way the markets operate first and foremost, and then be able to actually execute the plan properly. And now that we have Blackbird, we're assured that the trade management side, those rules will always be met. So that's what's so awesome about what we're doing now with Blackbird. That's really where I've had a lot of my shortcomings, is the trade management, not sticking to the rules of my predefined management plan, and adding to losing positions, moving stops, moving targets, getting greedy, thinking I'm going to make more than the trade is actually has the potential to give me, going for larger targets than is really even defined by the market. And all those stupid little mistakes that you make, those are the ones that really cost you big time. Those are the ones that really do damage to the account. If you can just keep yourself from making those handful of typical mistakes that people make, then you'll avoid having those massive drawdown days or weeks, and actually be able to stay in the game long enough to see some progress. So anyway, I'm going to stop talking now. This has been, 2.5 hours? No, Jorge, we don't have a free trial to the room, but you can watch these videos down here. And these are just edited recordings. The trading room went on for 4 hours or 5 hours most of these days, and we edited these videos down to I think this one is the longest one. It's 3 hours, but it was the least edited as well. This is the one where I'm up like $700 and then give it all back. Maybe that was Monday. No, yeah, here it is. Let me see. Yeah, I think it's, yeah, see, then we come up and hit that downsloping upper median line, and I'm thinking we're going to go right through it because I think I've got the low there. But it made one more low right after that, the following night, or that night actually. But then all the next week, Monday through Friday, I ended up just trading 1 and 2 contracts. I ended up with, I think it was 4960 something, $4,900 over this 5-day period. And then the past week, and then a couple of days the previous week, we were just using Blackbird in the room, trying to get everybody up to speed on Blackbird. And now I've kind of rebuilt everything, refined it quite a bit more, and we'll be starting to use that. I'll be using it on Monday. I'm probably not going to start teaching it intensively until the following week. So it won't be this Monday that we'll start the intensive Blackbird training. It'll be the week after this coming week. Trading room is $199 a month, but you'll get the first month in the room. If you want an example of that, Jorge, you can watch these recordings here. That's why we put them up here, to give you an idea as to what we're doing in the live trading room. All right, guys. If you have any questions, please send us an email. All right, thanks everyone. Have a good weekend.